Hi, Larry Gaines, Power Cycle Trading. Well, in this market with high volatility, I always like to look for very selective trade setups, either short or long, kind of have a combination too. So here's a potential trade setup for Disney, DIS. So first thing I like to look for is to see that price is above the major moving averages. So here you can see the daily time frame. So it's above the cluster moving averages, the 821, the 50, the 200 is way down here. So that shows some trend to the upside. Now the next thing I want to look for is momentum. So we use momentum indicators. So down here you can see cycle 1, cycle 2, there are positive momentum on the daily. And on the hourly we're starting to get some positive momentum here. Not quite. But the other big thing that I like to look for is potential for big breakouts, powerful moves up or down, which are kind of can be a very short duration type thing. So here this is showing you every time frame in what we call a volatility squeeze. So here's a 5-minute squeeze, a 20-minute squeeze, 30 minutes, 60-minute, 2-hour, 4-hour, and the daily actually did trigger already, 2-day squeeze, 4-day squeeze, weekly. So there is some big potential for this to really be moving up or down in a pretty explosive way. And right now I'm looking for this to potentially move up based on momentum being above moving averages. So here are a couple of ways. The next thing to do is once you find the direction that you want to look to trade, the next thing is to manage your trades with a very selective option strategy. So here are a couple different ways that you can look to trade this. So, first thing, the next step is I like to look for where's the potential target. So my next target would be, main target would be here 120, that prior high. So then I'm going to come over to the option chain. I'm going to pick an option series. So here's the 23 November, 8 days expiration. Here's 15 days. So we're going to keep it short duration. And then I want to see what the option market's telling me as far as the potential upside or downside. So the expected move here, they're giving us about a $3 expected range up or down for this November 23 series and a $4 up or down for the November 30. So I'd like to probably look at that November 30 series. That would definitely potentially put us up to 120. Could get there at the 23 series. So what I'm going to look at is a call debit spread using that 30 series. Okay, so I'm going to come over here and I want to do it pretty tight, pretty narrow, so it's very low risk. So here would be the trade setup that I'd be looking at. Look to do the December 30 November series 118, 120. So just a $2 wide spread. So it can get into that for about 76 to 80 cents. So risking 76, 80 cents maximum at risk, and then your potential maximum theoretical payoff if it was to close over 120 at expiration would be $124. So that would be about a 1.6 to 1 or 160% return. But if it gets your profit target ahead of time, you just go ahead and take profit. We can look at that profit potential, and that'd be about 40 to 50 bucks profit if it got there tomorrow. So that's one trade setup. The other one would be just to do what we call wide body butterfly. Would come out here and I could look to do the November 23 series, the 118, 120, 122 butterfly, $2 wide, going for 38 cents. And this is a really low risk trade, maximum risk 30. If it went out at 120, you're going to make about 160. But the thing here, you've got to really, to make that money, you've got to really wait till to get into next week's expiration. So I want to keep that very short duration. So these are two trade strategies for a directional up move that have very low risk but really good reward. So hope that helps. Talk to you on my next video update.